on the 14th of May, 2021. This is episode number 1993. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopefully, you're hearing me nice and clear. I'm not blowing out your speakers, not sounding faint, sounding perfect. Jumping into the convergent trading pre-market summary sheet. Risk is on, baby. It's positive across the board, blue across the board for me, except for the U.S. dollar. The U.S. dollar is down 32 cents or 0.35%. We see allocation to silver, 32.5 cents. That's a leader today, up 1.2%. I'm not considering crypto in the mix here. Oh no, the cat. The Nasdaq's up 1%. And the Euro stocks are also up 1%. Crude oil jumping higher to 64.44. The cat has something to say. Also up 1%. The DAX up 137 points, trading at 15,317.9%. So the yen, the bund, the 10-year note, all of these are up. Everything is up. Everything's up. So that's where that stands. The S&P has now traded 244,000 contracts with a range of 32.75, 33 points in what looks like a short squeeze rally type action. The volume is in line. It's around the common volume for this time of day, 244,000 versus 248 for one standard deviation of volume, or the mode of volume over the last 252 days. So that's where that stands. The point of control has actually shifted to 41.3175. And then the current ES rotations are down here. These are the rotations. 5 points for the ES and 23.75 for the NASDAQ and so on and so forth. So that's where we stand. VIX taking a beating. That's right. The big thing this morning, retail sales month-on-month came in much lower than expected. The previous was plus 9.8%, plus 9.8% month on month. That was huge for March. And then the expectation, consensus was 1%, and the expectation was 0.3%, came in at 0%. And we dropped down from around 41.33 to 41.22 or so, 41.22, about 11 points. And the S&P's proceeded to climb back up. The market did not hold on to those lower prices. We simply had a spike down. Today we do get some important figures. Still, we do have industrial production, and that's in about 10 minutes. But the big one is the Michigan sentiment prelim. The prelim is a bigger mover than the final, expecting 83.5. And then business inventory is expecting 0.2, and that wraps up the week. This week. So that's where that stands. The overnight inventory, long 94% long. Just take note of that, 94% long. And that's that. Let's take a look at what I posted yesterday while I was gone. 1 second. 1 second, please. Sorry about that. I have to clear my throat there. I was just starting to sound hoarse. So here's what I posted yesterday while I was gone. I was looking for the first scenario being a pullback, likely pullback to 40.53. from the open, which did not happen. The open was pretty much a drive, and then the expectation is at least a test of 4104 from where we were opening, which was around 4070 at the time I posted this. 4070, no pullback, immediate push. So that shifts everything up. Like when one thing I want to note here that I haven't talked about that I haven't talked about. When I'm showing a pullback and it doesn't have one, you essentially have to push these targets higher up. We start because the range is likely to be the same. It's likely to acquire the same kind of range. But we open at 4070 ish is what I expected. That's where the market was at when I posted this on Twitter, as well as the Convergent Trading Head Trader channel. And then I was looking for at least a test of 4104. That's about 34 points. Looking for an extended target of 4120. And if you recall, the MC point of control is right up here at 4123. 20 is becoming the big area, especially since it coincided with last week's low. So 41.23.20, and that's the main idea. The secondary idea is to try to push higher, given that the overnight inventory is balanced. A little bit of a push higher and then a drop. And if it does drop, it's likely to challenge a 40.38, and then push through to 40.14 and expected 4,004. The single prints from the 1st of April. That was the target to the downside, still is the target to the downside. Here's what actually happened yesterday. This is going to look a little bit crazy until I hit this button here, where we eliminate some of these lines. So there it is. It opens right at 40.73.75 and down ticks 2 ticks, and then immediately pushes to 40.94.5, giving us the opening swing, pulls back to the mid of the session, and then starts squeezing higher, takes out the 41.04 and pulls back to it right here, and then just continues squeezing higher. There's a 41.23 MC point of control. Remember, the target was 41.20, 41.23, but the bias was long, and we got that. And then later in the session, European markets closed. It pulls back pretty deep. This is a really deep pullback here before it gets a second wind and pushes higher into the close. So kind of an odd trade. I wasn't here for it. The profile is relatively balanced with a minor lower distribution, but overall it closed pretty well. You could see where the high volume node right here on the composite. You see that right there, all the blue. That's the key that was the key target, 41.20, coinciding with last week's low. So I was looking for a test into last week's low, and then for it to pull back a little bit as the image showed. This image that I posted yesterday showed. So that's what happened yesterday. The delta's coming back in line, start trading again in line with price, which is nice to see. Remember, the delta's been getting hammered on the sell side for weeks now. Seems to be even keeled and fairly balanced. There were some wide rotations. You can see the rotational graph right here. There's some wide rotations to the upside and the downside yesterday. But overall, what did we do? And this is where I want to take you to the all-important composite chart. Overall, what did we do? Well, there's Monday for you, right? Monday comes in, good selling, good trading day. And then we end up with a gap to Tuesday. Remember, that gap was never filled on Tuesday. And then we test even lower. So we have what is an impulse down, a resting day, and then a continuation day. And then yesterday, a reversal day. But what we did is we traded on the inside and we traded on the upper portion of the prior day, and we've pushed back into what's becoming balance again of 41.20. This is not, of course, this includes yesterday's action, but the market is coming back and it's playing on that 41.20, which is all important right now. Even the pullback just now on CPI took us down into 41.2275, 41.23. So this area here is being well defended. So the expectation is today we're likely to take out Tuesday's high right in here at 56. Tuesday's high at 56, and we are likely to test this 70 area from here. This gives us about 36 points of range for today. I don't know, maybe that's a long shot, but it seems like it has found a really strong base and is rotating up. We have a multiple distribution profile for the week. We have a lower high, lower low on the week. After having an engulfing week last week, the buyers really need to make an effort here to bring it back into line, back into the 41.70 to 41.83. 41.83 is the big one up here. That's the big balance area, the big balance area up here. In fact, I can extend this profile up and you'll see point of control for this entire area, 41.80. That becomes the big target, and that coincides with the low of Monday. Remember, Monday we left this behind, could not touch it on Tuesday, and that becomes the big target for buyers on the way up. And as I said, the delta is starting to really come into play on the buy side here. We're seeing bargain shoppers come in the 40-50, 4100 area, and this is likely to continue to propel us higher without the intervention of news. What have we done in the overnight session? Let's kill these. What have we done in the overnight session? We open up on a drive in the overnight session, pull back a little bit, but overall, we are just trading into VWAP. We broke VWAP here, but that was on the number. We're trading well ahead of VWAP. We have this block up at the top, and that block goes all the way down to 23. So as long as we're above 23, I'm likely to continue to be bullish, looking for 41.56, 56, 70, 80, and 83. Right? These are the key areas above us now. These are the prices that you'll want to remember. Looking at the order book, excuse me, my throat for some reason this morning, it's very dry. Looking at the order book, 41.20 had 41.40 had a single block in it. It is the heaviest size in this area, coincides with the stock zone. This is likely to be a magnet this morning. I am not seeing a clean order book today. I'm not seeing a clean order flow. So if we clean this up a little bit, if we remove the size on here, let's do that. If we remove the size on here and look to see where the size is, there's some at 41.25 below. Remember, the 23 is important. And then beneath that, 41.20. But other than that, it's very choppy in terms of resting orders. 41.40 has been resting the entire session. The reason it breaks up like this is a function of what's shown at the time that may be a little bit bigger. And then above there, 41.47. That's what's in the order flow. And you just, the reason I show this is I want you to remember what's sitting there resting, what's sitting there resting in the book that may coincide with key identified reaction areas, and those become, for me, trade opportunities again. trade your plan, and so on. But that's how I'm looking at things. Here's what we're expecting for today. Today's expectations. Today's expectations. Open auction out of range, looking for responsive selling. We may get back into 41.20. We would want to see this 41.23 area hold, 41.20. 23. If it does hold, even if it pokes, if it does hold and we get a push up, now I'm hunting for buying opportunities, either buy breakouts or buy pullbacks, and then looking for 41.50 breach. Let's put that on here, 50, and then I'm looking for 56. 56, 70, 80, and 83. I know these are crowded together a little bit, especially the 80, 83. The reason is there was so much balance. There's been so much balance in this region that we're getting these stacked kind of orders. If you look at the stock zones in this area, you could see how these stock zones are really kind of on top of each other. But I'm looking forward to fight the 50, push to 56, push to 70, and then likely fall over. So with 20 to 70, that's a whole lot of range. So it's a long shot for the 70, but if we get an open drive, that could easily attain 70 this morning. So that's the primary scenario, bullish to the buy side as long as we hold 2023. The secondary, we push the high, the 41.38 high, consolidate up here, come back in, chop around at the open, and then give up the 20 and start working ourselves back into the prior day's range. In that case, I'm looking for a test of 4100. 4104 is in play. 04, 00. Gosh, I can't write this morning. 00. And then we start to look at the areas beneath 89, 83, and the bounce later on. I believe that we resume the expectation that selling is not likely to be sustained. Selling is not likely to be sustained. As you can see, this is how the swing rotations have gone. You can see that there's a clear rejection of the lower prices after the big day on Wednesday to the sell side. Looks exhausted, and then we came back and took it back up. This is what kind of feeds into the primary scenario being bullish. Okay, it is Friday, folks. It is Friday. It's the end of the week. Be patient. Make sure that you're focused in your trading and whatever your targets are. If you're not journaling, if you're not setting targets on Sunday and tracking through the week, if you're not looking to identify your errors and looking to improve those errors every week by Friday, then you are not likely to be making progress. If you worked for me as a prop trader and you're not doing these things, let alone working for yourself, you're not doing these things, you really aren't taking advantage of the time and the volatility and the opportunity that's available today. So you need to do these things. You need to see, what am I expecting? How did the market respond to what I expected? How did I execute on that expectation, on that plan? And what errors did I commit? What do I need to improve? What is my goal this week? If you don't have a goal, it's easy to commit errors, and it's easy to forget what those errors are costing you. If you have goals, you'll see that it just isn't wise to wing a trade. It just sets you so far back. And so that's why people kind of get into the cycle of not getting anywhere and feeling like the game is rigged or nobody makes money trading. No, people make money trading, in my opinion. We see it. I see it through EdgeClear. I see it myself through convergent trading and so on. But they're also not doing the work, unfortunately. And if they're not doing the work and are making money, it's generally luck, in my opinion. That's a very strong opinion, but I would like you to do better If you're not achieving your potential, I'd like you to do better. And it's in your hands mostly. Okay, the market's random, but you can recognize patterns in that randomness. Some trader wisdom there. I want you to do well. It is Friday. Have a fantastic weekend. Take care.